Hello, my fellow traders. I know we are in a very complicated situation. Market has no obvious direction. One day it is green, the other day is red, and vice versa. I need to explain something for you. I'm recording this video to show you why I believe we are in heading into a correction and I will explain it on the six biggest stocks in the market: Apple, Microsoft, Amazon, Google, Facebook, and Tesla. Then leave it to you to judge if it is true or not. I will start with Apple. As you see the Apple chart in the last year, you can see something very obviously. First of all, this is the Apple chart, and this is the daily trading value. Bar shows the daily trading value, and if the closing price is lower than yesterday price, the bar is red, and if it is above that, the bar is green. And also, this line you see it here. This is average weekly. It shows the uh, weekly average. So let's go to the chart. As you see it here, this 137 is very important critical point for Apple. We reached this once after a stock split on September. As you see on September, on that day, the trading value was around $26 billion a day, and the average for is shows around 23, 24, which is a trading value of around $120 billion in 1 week. As you see, we experience a correction up to 103, then we go up all the way, reach to new high. But the problem is, if you compare the trading value here to the trading value after that, you see a constant decrease in trading value. Why this is very important? Because if we want to reach the new highs, we need money influx. What shows money influx? The average trading value. So if we want to pass this high, we should have more trading value, not decreasing. Assume money is the power behind any trend. So when money is not coming into the stocks, any any upward trend becomes fragile. And you see that. This is what I can call it a bull trap, because we passed the previous all time high, but with lower volume. As you see it here, the average was around, the average was 16 billion, and the daily trading value was 22, which was here around 26 and 23. So 30% lower, 30% lower than the average around here. And you see another drop here. All, and why it becomes important, as you see it here, we touch 137 right after the uh, earning call, which was 42% better than expected, but the average trading value was around 12 billion. If you compare it with here, when the average was 24, so the average is half. So money constantly gets out of Apple. And because of that, Apple has not enough energy to pass this level powerfully. This this will be intact unless we see a huge amount of money influx in Apple stocks. Let's go see if this is the case in Amazon, in Microsoft, Google, Facebook, and Tesla. In You see the very same pattern in Microsoft. Here we had in September, the average was around 10 billion, and you see it is fluctuating at this level. It goes up. It is like 11 billion, but here we are talking, it decreased to 5 or 6 billion. As you see it here, the average is 40%, at least 40% below. So this could be a false breakup. And you see these price, I said any upward movement is fragile with lower amount of money. Most technical analysts or chartists think volume is not important, or trading value. You barely find any trace of trading value, because most chartists do not like it, and they said volume is irrelevant. I believe volume is very important because it shows us if there is enough power in this stock to go up constantly or not. Uh, let's go to Amazon. You see the difference. Amazon is another example of trendless style. You see that the number 300, 3500 is very important. We touched it with higher fundamental performance. If you compare this performance with this performance, you see estimation was 7.4. Here estimation was 9. Reported was 12.4. It is 15. So when you see fundamental performance getting better, but price of the stock cannot go further, what it shows you, it shows you there is not enough power. One thing is very important about Amazon. You see that on red days the volume and trading value increase. On green days, this is the green day, 14 billion. This is one red day, 26. So the power of seller is twice more, almost twice more than the buyer. When the power of the seller is twice the buyer, the price goes constantly lower. Let's The story in Google is different. The price is constantly goes up. It is in a upward channel. The fundamental get better and better, and if you see the fundamental report is better than all others, if you see it, Google is different. And trading, the average trading is almost the same for Google. But even in Google, in last two trading weeks, if you see constantly the volume decrease, even for with solid performance, but the price is much higher. There is there is good reason for that, because Renaissance technology, uh, Google is one of the biggest bets of Renaissance technology. They work on it and they believe in it. Okay, let's go to Facebook. Facebook. Facebook performance much higher than 6 months ago. Almost, if you see reported 3.3 and compare it to this 2.7, you see 20% better performance in 6 months, which is great, but the stock price is not even, it's around 5% better. But even in Facebook, you see constant decrease. And if you compare this day, May 6th, their trading value was around 6 billion, and you compare it with April 29th, it was 18. So it is 60% lower. You should ask yourself, if the fundamental is better, but people do not invest more, this trend becomes fragile or not? Could this trend reach to new highs or not? This is simple. As you see, I don't use any indicator. I just use money, trading volume, and average trading value of the day to evaluate the market situation. If you see it from here to here, when the price comes up from 130 to 300, you see this was what I call money influx. You see, the trading value was around 6 billion, the average was around 5 billion, and in most green days, you see the trading value was above the average. And the average at this level reached its peak of around 10 billion, and in one day 20 billion. So this is what I'm talking about. You can see it clearly here. Price goes up, volumes goes up, trading value goes up. So this is a strong trend, strong bullish trend, and you can see it clearly here. Let's go to Tesla, which shows the reality better and better. This is the best example I can show you guys to see if money matters or not. I said money is the key to go to push the price further. As you see it here, we have a strong bullish trend. And let's see, trading value was around 12 billion, average was 10 billion. Here you see that the trading value is 58, 59 billion, the average is 40. So the price goes up from 69 to 492, and the it is like 7 times, and you see at least 4 times increase in trading value. Then we see a correction. You see it is dropped to 27 billion and 12 billion average. Then it goes up once again from here to here. And you see the average is 56 billion and daily trading value above 30, 35. So from here, you see a constant decrease. In the very same day we are talking, the average decreased to 20 billion and daily trading value is less than. So, this is what I'm saying, that Tesla cannot go and pass its all time high unless we see trading volume and value around $50 billion or $60 billion. We are far away with the average. When we have, in the last 5 days, the average trading value was 15. We are far away. In the best case scenario, we can only wish and hope that the price doesn't fall more, which is, I believe, is not the case, because with all brand names come into play like Toyota, Honda, Audi, Mercedes, they all have their all electrified vehicle. on the road, or they are introducing new models in the next 2 year, 1 year. We will see a huge option in electric cars. So Tesla, the game for Tesla becomes much tough in next 2 3 years, and other rivals have their own loyal customers. So this is the fundamental, but what I talked about, you can see it in any stock. For example, Riot blockchain was here was here. It was 3.4 when I published my first analysis on Riot blockchain. As you see, the average trading value at that time was 24, 25 billion, and daily trading value was around 14. It goes up all the way to 80. It means 20 times, and you see the trading value was 100 times more. You see the average becomes 2.6, around almost 2 point. This at this time the average was 4.4 billion dollar in 5 days. This stock in February had around 4.5 average daily trading value. Look at that. 3 months before that, it was lower than 20 million a day. So this is how price, how money matters. You see, the money influx decreased to 447 million, and the price is less than half. So this is how money plays. Actually, I believe it is not good to follow the trading volume. It is good to follow the trading value, because if we see money influx, price goes up. If we see money outflux, it goes down. So this is what I think about the market. You can also see it in Marathon Payton Group. As you see it, the very same scenario. My first analysis published on this stock when it was 2.3. You see it goes up all the way to 57. The trading value at this time was around 8 million a day, and the average was 26. But it goes all the way to the point that it has averaged above 2 billion, 100 times more. You see that? Money goes out, price is slashed to half. So this is a reality we should accept. Please watch this video and ask your question about it. Thank you so much for listening to me.